We are here tonight for the Work Opportunity Credit. So thank you all so much for joining us. We will have our English and Spanish interpretation rooms. So we're looking forward to everybody choosing the language of their choice. We will go into that, how that's done in just a few minutes.
Buenas tardes a todos, estamos emocionados. Vamos a empezar dentro de un momento a hablar del crédito fiscal por oportunidad de trabajo. Vamos a tener canal de español y de inglés. Vamos a explicarles cómo hacerlo en algunos minutos.
Okay, well there, those are the fastest 2 minutes I've ever decided to do. Hi, welcome everybody. We really should get started. So we are here today. We're going to talk about the Work Opportunity Tax Credit, which you will see referred to as WOTC. It's a federal tax credit that you receive when you're hiring people for your business from the community who might need a second chance, people that are in certain groups that perhaps are not as likely to be hired, individuals where we can make a huge difference in hiring them. So the work opportunity tax credit is great in that you're able to provide employment for folks that may not otherwise have employment, but also there's a very valuable tax credit for you. So that's what we're going to talk about tonight. Just to tease it, the tax credit could actually be up to, depending on the category in which an employee falls, could be anywhere from $1,200 to $9,600. So I'm just throwing out that just to tease you. It's a dollar for dollar tax savings. So it's pretty amazing there. But before we start our presentation, I would just like to explain to everyone how interpretation works. We'll start first with our English and then with our Spanish. Sal, should I pause for a moment so you can get caught up?
Yeah, sure. Hola, buenas tardes a todos. En el día de hoy vamos a hablar sobre el crédito fiscal por oportunidad laboral o WOTC por sus siglas en inglés. Este es un crédito fiscal federal que uno recibe por contratar personas de su comunidad que podrían necesitar una segunda oportunidad. Y vamos a repasar la lista de solicitantes que califican. Así que bueno, dependiendo de la clasificación del empleado que uno contrate, puede recibir un crédito fiscal entre $1,200 a $9,600 por cada empleado elegible. Así que les voy tirando esas cifras para que se empiecen a interesar. Y el día de hoy vamos a tener interpretación al español. Primero vamos a empezar explicando cómo funciona el sistema en inglés y luego en español. You're good to go, Jen.
Thank you, Sal. Thank you so much. So we are going to be having interpretation, and these are the instructions for how you're going to join the language of your choice once I turn interpretation on. So you won't see this right now, but when I turn interpretation on, if you are on a desktop computer, as you can see here on the screen, you're going to see a round globe. You're going to click on that globe, and then you are going to choose the language of your choice. Even if you can hear me in English and you'd like to hear the presentation in English, please choose English, and our other language today will be Spanish. If you happen to be on a mobile device, you will look and find the word more, click on that, the option for language interpretation will come up and you'll choose your language from there. But again, please remember, you won't see that until I announce that I've turned interpretation on. So I'm going to pass this over to Sal.
Hola, buenas. Como les mencionamos, el día de hoy vamos a tener interpretación simultánea a idioma español. En el caso de que ustedes estén ingresando por una computadora, una vez abierta la sala de idiomas va a aparecer el icono del globo terráqueo de interpretación. En esta sesión les pedimos por favor que elijan el idioma español y silencien el audio original. Can you change the slide, please? Thank you. En el caso contrario, si están ingresando a través de un teléfono móvil o cualquier dispositivo de esa índole, una vez que esté encendido el sistema, tienen que hacer clic en los tres puntitos y la opción más, y a continuación elegir interpretación de idiomas e ir al canal de español y silenciar audio original. Muchísimas gracias. We're good to get started, Jen.
Thank you. All right, let's get going here. Give me 1 second. We're going to turn interpretation on. All right, please choose
Bueno,
the language of your choice. All right. Okay, if anybody does have any problems, please put them in the chat. And I think Margaret has put a little note in there for us. Please put your PDS number in the chat, your name and your PDS number, so that we can get you credit for attending. So before we get started with the presentation, I would just like to let everybody know that we are coming up on the end of a season, meaning that this is the last, almost thinking of it like the end of the school year, the beginning of a new school year. This is the last DECAL webinar that we're offering this season. So thank you so much for joining us. We also are coming to the end of two very, very important types of coaching that we offer. So the first that I have here, I have it in Spanish as well. I'll bring that up in just a second. We have free one-on-one business coaching, 30 minutes. There are topics that are listed here. We also, if you have something that you'd like to speak to a business coach about and it's not in this list, please reach out. We may be able to accommodate you. I'm going to move this over to the Spanish slide. So that is the free one-on-one 30-minute phone call coaching. And Margaret reminded me that the registration for that, as well as the next type of coaching we're going to talk about, ends August 12th. So we only have a little bit longer to register and take advantage of this opportunity. Again, available in our one-on-one coaching, available in English and in Spanish. And then this is the other coaching that is called small group studies, small study groups. You see a list of topics here. It is amazing in the fact that they bring you together. We bring you together with a group of your peers going through these topics. They're for 1 hour, again, completely free due to the generosity of DECAL. Excellent, excellent information there. There is also a stipend. However, this is also closing August 12th. So if you are interested in the free one-on-one business coaching or the small study groups, please register as soon as you possibly can, because unfortunately the opportunity will be over soon. Just before we get started, I just want to read the disclaimer that the information contained here has been prepared by Civitas Strategies and is not intended to constitute legal, tax, or financial advice. The Civitas Strategies team has used reasonable efforts in collecting, preparing, and providing this information, but does not guarantee its accuracy, completeness, adequacy, or currency. The publication and distribution of this information is not intended to create, and receipt does not constitute, an attorney-client or any other advisory relationship. Reproduction of this information and the recording of this content, including the use of AI, are expressly prohibited, and only non-commercial uses of this work are permitted. All right, so what are we going to talk about today? The Work Opportunity Tax Credit. And basically what that'll allow you to do is to employ individuals in your community. And by employing individuals who fall within certain categories, you in return as a business owner can receive a federal tax credit. So we're going to talk about what it is, right? What employees qualify. How much can you get back? How much does that tax credit really mean for you? Applying for the credit is basically registering for the credit, I should say, is not difficult. So we're going to go over that very simple process to do so there. There's some Georgia specific filing requirements. I'll talk about that. And then how you set your business up ongoing. So it's going to be, we're going to have a lot of information today, and we're going to talk about also how you integrate this into your hiring process so that you don't miss out when you hire anyone who could potentially help you qualify for that credit. So it is basically the Work Opportunity Tax Credit is the federal government's way of saying thank you to employers who hire people that might otherwise have a harder time finding work than other individuals. So we aren't talking about changing who you hire. It's basically about getting paid to do community-minded hiring, right? These are people that you may already be hiring and not even realize that you're eligible for a tax credit. And it's not a deduction. So the beautiful thing about tax credits, and I'll show you an example just to kind of drive it home a little later, but a tax credit is a dollar for dollar reduction of your taxes. So when you have a tax deduction, right? You have a put an expense on your taxes. That reduces your tax liability by a percentage. But when you have a tax credit, it reduces your tax liability dollar for dollar. So there really can be a huge impact to helping you lower your tax liability. For instance, let's say you owed $5,000 in taxes, and then it turns out that you have a work opportunity tax credit of $2,000. Well, that would mean your tax bill would only be $3,000, dollar for dollar. So if you were getting a refund, it would mean that your refund would be increased, right? It'd be more because you have that tax credit there. So it exists, honestly, to recognize programs like yours, small businesses that are the first to give someone a chance, right? You want to be able to employ the people that really need employment, who are qualified, who are going to make really great employees, but they may not otherwise be given a chance under other circumstances. So money back for the business, and you're doing what's right for your community. So we want to think about it in that state of mind. So who qualifies, right? What employees fall into these categories that we were mentioning? Well, this is a list here of the different types of categories that you would be screening for when you can either do this in your application process, or when you're going through, you've hired somebody and going through the paperwork process. So you can basically make this part of your hiring, and that's going to be our recommendation, because we see the list here. So if there are veterans who are transitioning back to civilian life, they need stable employment, they can qualify for a work opportunity. You would qualify for a work opportunity credit by having hired them, right? This credit is going to you, the business owner. I will tell you that veterans actually are the category in which you would receive the highest amount of tax credit. So they have been there. When we look at the range of tax credits, that hiring veterans happens to be the highest tax credit you could get there. If you have anyone coming to you who is a SNAP recipient, right? So if they're receiving food stamps on food assistance, anyone who is receiving the temporary assistance for needy families, that any individual on that program, you would be, but if you hired them, you would be eligible for a tax credit there. If individuals have been unemployed for a long time, at least 27 weeks or more, hiring them can help get you a tax credit there. If a vocational rehabilitation center were to refer someone who has a disability, you could receive a tax credit for that. Individuals who are receiving the supplemental security income, the SSI income, they would qualify there. Just kind of keeping in mind, that there are a lot of different categories here, right? There are a lot of people that fall into these categories. People with felony convictions do apply, of course, in the world of childcare. There are very, very strict licensing rules. However, if someone were to have a felony conviction and still be eligible for hiring due to licensing and laws, they would also help you qualify for a tax credit there. In really high unemployment zip codes, there are the ability for you to receive credits for the business for hiring people in those high unemployment areas. And then youth who are hired for summer jobs, has to be in designated areas, different zip codes. You would be able to go ahead and hire them. There's also, for next summer, think about 16 or 17-year-olds who are working during the summer. You can get tax credits for them. So these are the people who are available in the community, who want to work for you, who may not otherwise have been given the opportunity to work with a small business, to start a career, to learn, all the very, very valuable skills that come with caring for children. They could be very long-term employees for you. So fantastic in helping us with that recruitment and retention struggle that so many businesses have. And at the same time, helping the community and getting you the work opportunity tax credit. So it's this major win for everyone, right? So we want to just kind of take that into consideration. So Okay, what does the credit look like? Because I'm telling you, hey, this could be pretty substantial, right? Well, the credit ranges anywhere from $1,200, as I mentioned, to $9,600 per eligible employee. And that amount does depend on which category that they fall into. They're called target groups. So when we saw that list, those categories, those areas of definition are considered to be target groups. So part of the credit is determined by which targeted group they fall into, and the other part of the credit that comes together to form how much you're going to receive is based on how many hours they work for you, right? So um, basically, often the number of hours worked within a year. There are some of the categories that will allow you also to receive a credit for the following year as well, not just for their first year of employment there. So we want to think about the target group, all those categories that we took a look at there, and the amount of hours they worked during the first year. And then there are some groups that we can identify that you would receive credits for 2 years. So if we had a SNAP recipient working full time for us, and basically full time equals basically $2,400 credit for that one employee. That's pretty significant. And there's no limit on how many employees you can claim. And keep in mind that a lot of times, you may have more eligible hires, you have more and more people that fall into these categories. And we know that employees don't often stay as long as we would like, although this is a real incentive, the fact that you're hiring individuals in these challenging, these categories who may otherwise be challenged finding employment. Basically, if you have some people leave and you're hiring new folks that fall into these targeted groups, just keep in mind, then you would apply for the work credits for them, right? So what's really nice is that it reduces your taxes dollar for dollar. So it's not as if it's some kind of funding that that you're going to be told how you have to spend that. No, it reduces your tax liability, but not just by a percentage like what would happen if you had a tax expense. One of the things we want you to think about when it comes to how much credit am I going to get? What's that credit going to be? Well, we talk about the category in which they fall into, but also the amount of hours that they work in a year, right? So if an employee were to work between 120 and 399 hours in a year, that's considered to be part-time work, and you would get a credit of 25% of their wages back as a credit within that group's range, within the range for that particular group, I should say. Full-time employees, so anyone who's working 400 hours a year or more, you get 40% back of their qualified wages, but there is a cap for each category there. So, if you had somebody that you paid $5,000 in the first year that they worked for you, they worked full time, you would actually get back $2,000 credit for that one employee. That means $2,000 comes off of your tax liability. It's huge. It's a really big deal there. If you do have situations where you have turnover, hey, if you're hiring new people on the regular, if unfortunately there's some turnover, which happens, you're creating new opportunities for tax credits for you throughout the year, right? So every time that you hire, if you were to hire someone in one of these targeted groups, you would be opening yourself up for this great opportunity to get that tax credit. So you'll be thinking about this hopefully all throughout the year. Now, one of the most important parts of this program is following the rules. And one of the most crucial rules that we happen to know is not flexible whatsoever is that there's what's called the 28-day rule. All right, so this means that the forms, and we're going to talk about what those forms are and how you file them, how you fill them out, where you file them. You have to have those forms submitted within 28 calendar days, not business days, calendar days of when the employee starts work. Now, keep in mind, we know that you are extending offers to people and then they're having to go through their background checks. It isn't until they've cleared their background check that the clock, the 28-day clock, starts to tick. That's the day they're allowed to work. If you were to have them work for you in another area that was not involving children, obviously licensing, you have to be very, very careful. Think about when you start to pay them is when the 28-day calendar starts. And if you were to get this filed on the 29th day, they will reject it. We know, we have examples of individuals who've learned of businesses that have just missed it by a day or two. And there is no exceptions whatsoever. They're just automatically rejected there. So what we would like you to do is to think about, hey, this credit is so crucial that I'm going to make it part of my onboarding process. Going to be part of when you are completing their I-9 and you're doing their tax forms and all of their verifications. We want you to make this a part of your hiring process where you're asking the questions, completing the form, and then getting that form submitted. So you want to set yourself a reminder for every new hire that you have that this becomes part of the process of hiring and keeping that 28-day rule in mind, right? We're going to get this paperwork filed well in advance of the 28 days. Get that over there because businesses can lose thousands of dollars just by missing that deadline. And as we mentioned here, there's no flexibility on that one. If you've missed it, you've missed it. So just want to kind of keep that in mind that we want to do that. So I'm sure everybody's thinking this must be very complicated. Am I going to have to involve a tax preparer? How am I going to handle this? At the end of the day, you are going to be applying for this as a tax credit on your federal taxes. But this portion that we're talking about here is how you basically are applying for the credit to exist so that you are eligible. And then you or your tax preparer would be filing to receive the credit, right? So this is what we need to do to get started. So let's just kind of walk through the process just step by step. So if you've hired within the last 28 days, stop and think about, is there anybody that you could start with tomorrow, that you could start to get the credit with tomorrow, right? So we'll think about people that we've hired within that last 28 days. And then we're going to start to think about doing this going forward every time we hire. All right. So what we have to do is screen for eligibility, right? We need to find out, do they meet all of the work opportunity tax credit eligibility? I'm going to jump down really quick. If you look at step 5 here, it says form 8850. 8850 is a form that you can and will give to employees as you're going through the hiring process that has the questions, the screening questions to determine, are you eligible to receive credit by employing them? If you were to ask any of those questions out loud, rather than having them read the questions on the form, you must stick exactly to the wording of the question on 8850. Do not paraphrase, do not summarize. If you're asking some of the question for legal reasons to stay within your requirements as an employer hiring, please read those questions. Do not paraphrase, do not come up with your own explanation for that. That's allowable language for hiring. You do not want to play around with that, right? So basically there's that form that you're going to use in the hiring process, and that's how you're going to determine, do they meet the work opportunity tax credit eligibility? Great, we have that. You're going to make sure that you have the amount of wages that you will be paying them. Hours information, you'll see that there'll be hours worked, but remember, you're applying for the credit at the end. You're receiving the credit on your taxes next year. You're going to be filing for the credit. This is making sure that you are registered for eligibility, that we're getting the wheels turning, right? That we're getting the wheels turning. And part of that is that when you're filing and completing the IRS form 8850, these forms are going to actually be submitted to the Georgia Department of Labor. So yes, it's a federal tax credit that's going to go on your taxes, going to be claimed through your taxes, but the forms are submitted to the Georgia Department of Labor. And the Department of Labor portal, I'm sure as employers, you are all familiar with the Department of Labor portal, but if you aren't, Margaret is going to put in the chat, she will go ahead and put the link for the Department of Labor, Georgia Department of Labor in there. And that's where you would go and you would submit the form. So we've got the IRS form, the 8850. So you want to keep that in mind there. And then there is also the Department of Labor form 9061. They're not difficult forms, and honestly, a simple Google search, you could look at them tonight and see what they look like there. So once those two forms have been completed, once we've gone ahead and we've done the above steps, then you submit them through the Georgia Department of Labor portal. That's not difficult at all to do. If you're not familiar with the portal, Margaret is sharing the link. You will have to register if you do not already have an account through the portal. I think the majority of employers joining us on the call most likely already do. All right, let's talk about what those forms actually are, because I'm sure what everybody's thinking is these must be very, very difficult forms, and why do I have to fill them out? These are the two. This is it. These are the two. And actually, some of the information is a little is duplicated. So the information included on each of those forms is similar, but both are being filed with the Department of Labor, and one is going to be sent to the IRS and one is going to be kept for Georgia. Right? And you're going to fill out these two forms for every employee that would be eligible for you to receive the tax credit. Basic information that is filled out, such as the employee's name, address, social security number, contact information, and then these questions about their eligibility. Do they participate in SNAP? What is their veteran status? It walks through all of those different target groups that we saw. It asks questions. Are they this? Are they that? Do they receive, et cetera, et cetera? All very, very straightforward, easy to understand. All the areas of eligibility that we talked about earlier, you're going to find on the form, right? There's an area there where you put in your business's identifying information, and basically dates when when the employee filled out the form, answered those questions, when they were offered the job, when they were hired, and when is their start date. Remember, the clock starts ticking, right? And then both you and the employee sign the form. That's basically what we're looking at on 8850. The Department of Labor form is basically called individual characteristics, the individual characteristics form. And this is where they are also entering the specifics to determine if they're eligible. So we're doing that. They may be asked, are they receiving any type of assistance, qualifying assistance, or is someone in their family receiving qualified assistance? They have to put down the name of the primary who is receiving the primary benefits, the city and state where the benefits are received. Youth employees would be putting in their birthdays. So basically the information that you're collecting here for these forms are very, very straightforward. You're going to find that, yes, you're never before asked those types of questions when you've been hiring, but they are very, again, straightforward, easy to ask. The wording is there. We stick to whatever it is that Form 8850 asks as it asks. Two simple forms, but boy, they've got to be submitted within that 28 days. No except 28 calendar days, right, from the employee's start date. So they're actually not these crazy complicated tax forms. You shouldn't have to pay anybody to fill them out. They're almost like intake questionnaires. So you really, when you look at them, you'll see this isn't something that you're going to feel like, oh, I don't know if I have any way of being able to do this myself. Easy peasy. You're just going to follow the questions, follow the steps there. So it's important to know that every state does have its own process, because the forms are filed with the state, and then the credit is applied for when you are filing your taxes, right, with the federal government. So here in Georgia, the forms, the 8850, as we mentioned, and the 9061 submitted through the portal. on there. And again, you may already have access. Most employers do. If you don't, you're going to set up an administrator account number. You have to have your Georgia Department of Labor account number, the FEIN, and a PIN number that you would have because you set up access to the portal, right? So you would have that. They're uploaded within that 28 days, right? And you do need to keep records yourself. Don't rely on the Department of Labor to keep these records for you. Keep the forms on file for 5 years. As part of your federal taxes, we know we always need to hang on to information that we used when we filed our taxes if the IRS were ever to come back and ask for proof. So we're going to make sure that the original forms that we keep them with, you're keeping very safe, secure, and excellent records for your hiring processes for your employees anyway. Please make sure that you know where those forms could be found if after filing your taxes, the IRS had any questions, right? So we want to make sure, and that's not to scare you from doing this. This is not scary on there. Every once in a while, we will get the question of, hey, what if I'm a nonprofit? Can I claim that? Well, actually, a nonprofit can only claim the credit for veteran hires there. And it's not with income tax because most nonprofits are not paying income tax, applying this to any type of tax. They're actually applying the credit to payroll taxes. So if you are a nonprofit and you've hired or hiring a veteran, you can apply the credit towards your payroll taxes. Please, by all means, speak to an accountant if you're a nonprofit, because there may be other ways that this needs to be handled. I honestly do not know every single detail. So please speak to an accountant if you're a nonprofit so that you are able to take advantage of the credit whenever possible. All right, so I'm talking about this, right? Hey, I dangled some numbers in front of you, but what really is at the end of the day, what's the impact on your taxes, right? And this is where the money shows up. This is the big reveal, right? It doesn't give you cash right away. You're not going to file for this and receive a check, but it lowers your tax bill, right? Lowers your business tax bill when you file your taxes. So what will happen is you file those forms, the 2 forms with the Georgia Department of Labor, and then when it comes time to do your taxes, there's a tax form, the 5884 Work Opportunity Tax Credit Form. That form will be filled out and included with your taxes, right? So that amount, dollar for dollar, get a credit for $2,500, boom, $2,500 comes off my tax bill. So let's look at an example of what this actually ends up looking like just to kind of put in everybody's head, the difference between a tax credit and, let's say, a deduction / expense, right? We're all used to expenses on our taxes. We're all used to taking allowable deductions. So in this particular instance, our provider loose has an effective tax rate of 31.8%. We've just chosen this as an example. This is not anything that we're going to go into any detail. Her tax rate, 31.8% there. If she had an allowable expense for $1,000, let's just say $1,000 worth of equipment or educational materials or whatever, she had $1,000 expense, right, which is a deduction that she takes on her taxes. I think what a lot of people don't realize is that deduction is not a dollar for dollar reduction. Instead, it's based on the percentage of her tax rate, what her effective tax rate is. So $1,000 deduction multiplied by her tax rate means that in this instance, she would save $318 in taxes. $1,000 deduction means a savings of $318 in taxes. That's definitely not unsubstantial. But let's look at this next. Let's say she gets a work opportunity tax credit of $1,000. $1,000. That $1,000 is $1,000 in taxes saved. So if we looked at this example, she had $1,000, again, bought some materials that she needed. Well, that $1,000 deduction, that $1,000 expense, wow, that saved her $318 on her taxes. And then that $1,000 tax credit saved her $1,000 on her taxes. And these two combined would have saved her $1,318 in taxes. Look at that difference, dollar for dollar. Every amount of tax credit that you receive for the work opportunity tax credit, that amount is the amount that your taxes are going to be reduced. And remember, you can do this for as many eligible employees as possible as you hire. If someone were to leave and someone new were to come in with the eligible for the tax credit, you would then apply again within the 28 days, filling out the two forms, and you would apply again for that new employee. So this really should be, right, an ongoing part of your hiring process. So, let's kind of take a look at that. If anybody also is just curious about this effective, I put in this effective tax rate of 31.8%. Look at for your last year's taxes and you'll see what your effective tax rate was for the year. If this is just triggering a, like, what's my effective tax rate? Take a look at what it was last year. It might not be the same this year. But really what you could do is you can look at your total tax liability and you divide that by your total income, and that's your effective tax rate. So you'll be able to look at last year if you're just curious, because now I've teased this, right? I've said effective tax rate and I'm not going into any details. What the heck is she talking about? So this is where, right, the rubber meets the road. We need to make the work opportunity tax credit part of your hiring process, because otherwise you're going to miss qualified employees that could have gotten you credit. The 28 days is going to fly by. It can help you make an informed decision. It's not that these are people who are looking for work in your community already. Take advantage of the tax credit because they may very well be available. Well, what does that mean? If you remember, I said the form basically has all of the questions, the screening questions to determine is an employee eligible for, or you eligible to receive the credit due to the eligibility of that employee there. So we want you to make this credit work for you long term, right? We want you to build it into your system. So there's no reason that you can't take this screening, those questions on that form, and make it part of your onboarding process, right? Make it part of the checklist. You check the references, but before the first day that they work, you add this into the process so that you can determine, is this hire going to help you receive the tax credit, make you eligible to receive the tax credit? And then that way, boom, we're not worried about that 28-day deadline. We're getting moving on it as soon as they start getting these forms filed. Again, it's not the same as filling out tax forms. They're very, very straightforward. And as I mentioned before, think of those forms almost as questionnaires. They're not difficult at all there. So I want you to make this part of your hiring process. Everybody that you hire, it can't hurt to ask if they fall into any of those targeted groups, right? Have a tracking system to make sure that you are getting that done within those 28 days, right? That needs to be, whether it's setting calendar reminders. I personally would hope that people could try to get it worked in so that in the first couple of days of hire, that is automatically part of the process, but just to make sure that you are able to get that all done within those 28 days. I'm going to show you next actually a calculator that Civitas Strategies that we have created. Oh, you know what's so funny is I never introduced myself. Hi, I'm Jen from Civitas Strategies. Last webinar of the season, guys. Okay. So Civitas Strategies has created the Work Opportunity Tax Credit Calculator. Margaret is putting that link in the chat for you. What it is about, what it exists is to help you determine if someone is eligible and estimate the potential credit. So this is really a big deal. It's free. It's been created by Civitas Strategies. We really encourage you to use this because it will make this process so much easier. Right, here we go, easy, easy peasy, right? Use the credits, the calculator. So I have the QR code on the screen, but Margaret's also putting the link in the chat. It's completely free. It will help you estimate the potential amount, determine if someone is eligible. It's great. There's a lot to this free resource. Please, please go ahead and use it. Play around with it. Even if you don't have somebody that you're hiring today, wouldn't it be great to know how to use the calculator? So when someone comes in, into the hiring process, boom, you have this at your ready. Save it on your desktop so that you're able to access it very easily. Save it with any computer folders that you have where you are keeping your hiring materials. Train your employees to make this entire process part of hiring. Just, if you have anybody on your staff that helps you with the hiring process, they should be very, very well aware of the work opportunity tax credit, right? So we want you to be able to do that. This calculator has been created by Civitas Strategies. It is property of Civitas, so it's something that's exclusive to us, and we were very, very happy to create it for you to help you. So, all right, here I am saying, make it part of your hiring routine, right? Make it part of how you put all of your hiring and your payroll together. So if you do use a software like ADP, if you use Gusto, if you use spreadsheets to manage your payroll and your hiring, you could build the tracking for this right in there. There are actually some platforms that have the work opportunity tax credit screening built in. If it's something that you're working on that's more of an internal system, set reminders, right? Track dates, track hours in the system. Doesn't have to be fancy, but you need to make sure that it's something that is a routine. We want to make sure that we are continually including this in the process. So what could potentially be some mistakes, right, that we could make? What are some of the obstacles that we may come across? Well, without a doubt, the most common mistake that is made is missing the 28-day deadline. Without a doubt, you have only those 28 days from the time that the employee starts to submit that paperwork to the Department of Labor, and it's a hard deadline, right? So set the reminders, make it part of your process there. As soon as someone starts, make sure that there's a task on your calendar to file the work opportunity tax credit forms. Make it those questions, part of the forms, part of the hiring process. It takes very, very little to set up the process. It takes very, very little time to complete, to submit to the Department of Labor. But boy, isn't it? It's a really sad situation when a business misses the opportunity just because of the 28-day deadline there. So if you're waiting too long, if you're not screening and asking those questions, basically it may already be too late because you aren't having that part of the process where it needs to be. So ask those eligibility questions during your onboarding, right? When you ask for the IDs, when you do the W-4s, when you do all of that, this becomes part of the process. So make sure you screen. Don't wait for someone to be working for you for 14, 21 calendar days and then say, oh, by the way, or you overhear them say something, I didn't know that you were a veteran returning to the workforce. Oh, hang on a second. No, let's make this part of the ongoing process, right? You can have a checklist for new hires. Did we ask all of the questions that are on the form? Are we just make it part of a checklist? Did we ask all of these? The SNAP recipients, veterans, long-term unemployment recipients, youth employees, individuals who have been unemployed for individuals in certain young individuals in certain zip codes. Couldn't get that out. Basically, make sure that you are asking those questions there, and then you have to keep copies of the form. All right, because your tax preparer, when they go to file the tax form, they're going to ask you for that documentation, and you want that documentation to exist going into the future. So we make sure that we have the copies. We scan them. Digital copy is just fine. Make it part of your system, know where to locate them, make it part of the great record keeping habits that you already have. You just integrate this, right? So something else that we do find is that a lot of people think that because it's a federal tax credit, the tax preparer handles everything. And they don't. They cannot submit the actual forms with the Department of Labor for you. You, as the employer, have to do it within that 28-day window. The tax preparer will need the letters that will come from the Department of Labor certifying that you can claim that credit on your taxes. So there are going to be things that you're going to share with the tax preparer. It's a two-step partnership. You have to do the filing yourself with the Department of Labor, and then you have to have those forms available so that your tax preparer handles the credit on your tax return when they're preparing your taxes, right? So this becomes a bit of a partnership. And again, always keeping that 28 days in mind there. And just keep in mind, you guys I know you're busy and people turnover happens a lot, and you don't want to be scrambling to hire someone, somebody leaves, you're scrambling to hire and forget all about this. And this is why you will set this into your system for hiring. You will create a checklist, have that form out available so that you're using it in all of your hiring processes. Use the free calculator. Make that part of every time that you're working with someone coming into your organization that you're doing that, right? It's going to be a habit. We need to make it a habit. So those are what we see. Those are really, to be honest with you, they are the big pitfalls. But with a little bit of planning, with making part of love for everybody to think today about how am I going to make this part of my hiring routine? How am I going to make this part of all of the operations that we do when we're hiring someone to make it very, very easy to implement and to make sure that you get it in within those 28 days? Because it's sad. It's very, very sad when you find out after the fact that there's somebody that you could have qualified for that credit. And I'm so sorry, if you hired people earlier in the year and it's been more than 28 days, you cannot apply for the tax credit for them. So we want to think about within the last 28 days and going forward, if you'd like to think about that. So the money that you can save and the help that you are giving your community and the really highly qualified workers and employees that you're going to have through all the great training and onboarding that you do, it's a win-win for everybody. So the federal government is rewarding you for hiring folks that really need to be hired within your community, and you're doing a huge service by hiring them and receiving the tax credit at the same time. So we're actually going to see if anyone has any questions. What I will do is I'm just going to advance to a slide really quick, still going to take questions, but just also want to let everybody know we talked about the one-on-one coaching. We do also have some tax coaching that you would be eligible for free. Again, have to register by the 12th. But if anybody ever wanted to share last year's tax return with us and have our tax coaches take a look at it and do what's called an assessment, I'm going to leave this up on the screen while we take questions. Take questions in case anyone would love to have their previous year taxes assessed. We're not tax preparers, but we're happy to look at your taxes to see, is there anything that you could have possibly missed? Is there anything that might be a trigger with the IRS, anything that could potentially be wrong? Maybe it's just something put in the wrong place or a calculation done incorrectly, but it would be a great time now to take a look so that as you prepare for your taxes the rest of this year to file in early 2026, you'd know what to look for. So I would love to take any questions if we have any. All right, Margaret, is there anything in the chat? Because I haven't looked.
Yes, we do have one question in the chat from Ray. It sounds like they hire students in the summer to assist in their program, and then they leave at the end of the summer. And that is a recurring loop. So then they rehire them the following year. Would they qualify for the work opportunity tax credit?
They most likely would, as long as they're 16 and 7, just like between 16 through 17 before they turn 18. They would, and yes, if you hired them one summer at 16 and the next summer at 17, they would be eligible, and you would be eligible for the credit because you're rehiring them the second summer.
Thank you. Okay.
You're welcome. Have any other credits? I'm just kind of scrolling.